To see everybody. I'm really excited for everyone to be here. Welcome to our monthly Path to Profit with Yay live webinar series that we host every single month on the third of Thursday of the month at 10 o'clock a.m. Pacific Standard Time. And I am so glad for you to be here today. Thank you for joining, supporting, and being part of this growing community of forward-thinking fashion and retail leaders. Each month, we go deeper into the areas that directly impacts profitability, from supply chain and merchandising to brand strategy and process optimization. Our missions here is simple. Help your brand to build smarter, more profitable business. Our mission is to drive maximum value and learn from one another. Today's topics is very exciting and it is one of my favorites. It has become in the last decade and one of the most really often where a lot of our clients and lots of founders and executives are overlooking when they're thinking about how to grow their brands, how to take them to the next level. So we're going to be talking today about maximizing revenue through strategic licensing partnerships. If you have tuned in onto our executive roundtable at the beginning of the month, we have already started to talk a little bit about it. But today our goal is to dive much more deeper in it and hopefully to unveil more ideas as you are thinking of how to take your business to the next level. But before we dive in, do me a quick favor, please. If you find this valuable or drop a comment and send your questions as we go. I love to be able to address the questions on the call as we go. It becomes more interactive. If I'm not able to answer it, then I will get back to you guys afterwards offline. If you are watching this as a pre-recorded at your leisurely time, then please feel free to come in and still add the comments. We will get them and we will be able to respond. When you are liking and interacting with our content, it lets us know that we should be doing more of it and that we are bringing the value. Make sure that you share the content as well with anyone that you think can benefit so that we could really truly maximize the reach and be able to share the knowledge with everyone who potentially might need in our business. That helps us to really delivering deep sessions that makes a measurable difference in your businesses. And really stay tuned until the end. I will share what is we will be covering in the next month. And I promise you, this is not a sales call, and I am not planning to sell you guys anything. My really goal is to share the knowledge that we have so that we could be able to help you grow and become more profitable. Before we start, for some of you who are new, and thank you for everyone who's watching us live, we are broadcasting this to multiple platforms. I'd love to just really introduce myself, whomever who does not know who I am, so that you are able to understand as what gives me the ability to talk about this in such depth. My name is Evgenia Alexandrovna Yushkova, or simply Yay. I'm a founder of a boutique business consulting business, Yay Designs, where we help fashion and consumer brands scale profitably by optimizing end-to-end operations and unlocking new revenue channels. We're not only looking at the operational sides from the process perspective and systems, but we also look at merchandising, product development, your assortment strategy and plans, as well as if you are interested or you are a retailer who potentially thinking about how to grow your margins. We do also specialize in our biggest specialty is private label and building private label brands. Earlier this month, as I mentioned, we held an executive roundtable and on the topic of leveraging licensing for strategic brand expansion. We're going to drop a comment below with the link to that recording so that you want to be able to listen to it and catch on so that it gives you a complete full picture. That section really gave us a macro overview, what licensing is and what its missed opportunity for the most people are. Today, we're going to go a little deeper, and this live webinar that we're hosting will really think of it as a masterclass on how to operationally look at your licensing as a scalable revenue engine. We'll cover a framework, valuation models, and partner selection systems that make licensing work, not as a one-off deal, but as a growth architecture. So let's get started. And I'm seeing that people are tuning in, so I'm really excited. Thank you everyone for our being here and being here, supporting us and listening to what we have to say and sharing our knowledge with others as well. Most brands reach a point where the traditional levers stop working. You are optimizing marketing, you might be pushing sales, you might be even expanding your channels, but what you often will find, there will be a point where the margin still plateauing, where you already reached your cap and with your brand, and now thinking about where do we go next, because no matter how much effort we're putting in, our margins is still there. At that point, the problem isn't really the marketing or demand. It's really the leverage that we need to take a look at it. Licensing is leverage. It's how you scale brands reaching without scaling the cost. To evaluate if you're ready, you use 3 internal indicators. First, you will look at the brand asset value. How much equity you have in IP, patterns, or trademark assets. Thinking about anything that could be an audience recognition as well. Maybe you have a really large following that could also be leveraged. Then we'll look at the scalability efficiency ratio and really thinking about how easily your brand identity can be replicated without heavy CapEx. Measures how fast you replicating identity without really replicating a cost, right? How quickly you could be able to grow without putting more resources and money in your operations. Then we want to look at the category adjacent scores, where we look at how naturally your brand can expand into new categories and how they can naturally expand with ease into those categories. And when your scalable efficiency ratio and category adjacent scores are strong, then licensing is no longer becomes a gamble. It really becomes your next stage of profitability expansion. Drop a yes in the chart if you actually ever felt like your margins at this point are already plateauing or your business is plateauing. That sense you are working harder, but not really earning faster. I'd love to hear you guys if you are experiencing this today. Often we are asked by clients who are coming in to work with us is, will the licensing really improve our margins? And the answer really to it is yes, absolutely. Licensing adds variable revenue without really fixing operational costs. It will lift your EBITDA because you are monetizing your IP, not adding a headcount. The other thing that often is asked, is the collaborations that we do with the brands are the same as licensing. And it's often confused by members of founders who are not necessarily familiar with licensing as much. And no, collaborations with other brands are really we look at as a short-term visibility plays. Licensing builds a long-term recurring revenue. So if your strategy is focusing on collaborations, and that's great short term, it's important to think about what would be your long-term strategy and would your brand be right for licensing? And if it is, that's wonderful and we should traject towards that. But if it's not, maybe the question is, what can I pivot within my brand to be able to long-term add on an extension and actually work off of licensing and get some revenue, that recurring revenue that way. What really matters is clarity when we start to do licensing. It's not necessarily a big brands can only be in the licensing space. It's really true, it goes back to your brand DNA. If your DNA is distinct and it's protectable, then you potentially might be ready for your licensing strategy. Now, not necessarily it will also happen in the first day, because if you're just starting up and if you're just new brand and you position yourself that you want to be a brand that plays in licensing, there's quite a few steps that needs to be taken. And of course, we need to make sure that the product is being proven and you have following and customers loves your product, and it sells before you actually start to execute on licensing. But those strategies should really be put in place early on so that you can traject towards them. Everybody and every company really has a hidden licensing potential sitting inside its brand. And how do we really find it? First, we want to think about identifying customer touch points you don't monetize yet. Maybe it's a signature hardware or recurring hero prints that you're known for, or maybe some visual motifs. Often we are told by our founders, well, I have a great logo and a great concept behind the logo, and that means it's licensable, and I want to go into licensing. Well, just having a great logo is not going to get you into licensing or be successful within that. With that logo, you need to have a great brand recognition and following base and sales in order for that to be reputable and legible for the licensing piece. Think about the second step is to thinking about the cross match with the external partner strengths. How, who really already has the infrastructure that you are potentially lacking. Then we want to look at really scoring your each ROI to effort ratio and tier them by short-term cash flow versus long-term brand expansion. When every partnership has a defined purpose, you create what I call revenue portfolio by design. Often we are asked which categories perform best in the first time licensors. We think about looking at what your customers really already buying. And we look at really often it's apparel brands often extend to naturally into footwear, accessories, and home fragrance as an example. And if I want to really test the interest before investing kind of in the legal work, we often say start with capsules to co-brand drops to gauge the sell-through, then convert the winners into the license. And this is where your co-branding strategy short-term can actually help you to define the directions of your licensing. And if you're thinking about whether your licensing program should be focused on international or the local first, we really think about beginning where the demand already exists. So if you and your brand is in demand within the United States, well, start first locally, then expand internationally. Because often visible through organic e-commerce traffic or inquiries is where going to be important to be able to help you drive the success of your licensing program and for your licensees partners. A well-structured deal is what really going to be a protection and later on your multiplier. And when we think about licensing, it's really a lot of has to do with your contracts and agreements that you will negotiate and put together for your licensees and what type of agreements that you guys are going to land on. And it can either break it or make it, right? So making sure that that's structured correctly and accurately, seeking a professionals who are specialized in those. Our team does it. There's many other teams who do it as well, to be able to truly help to position yourself with the right contracts and terms in place. First of the things we really look at when we build those type of contracts, we'll look at the tiered royalties. Typically, royalty rates scale in verses, right? Starting from a higher and reducing slightly as the volume grows. For instance, if you're starting up with about 12% of royalty for up to $1 million of sales, then you might be dropping it down to 10% of royalty if it's between 1 to 5 million, or 8% beyond that. This structure really rewards high-performing partners and licensees and keeps them motivated to expand the distribution. Because the more sales they're able to generate with your license, then at the end of the day, more recurring revenue goes back to you to use and reinvest into your day-to-day business. That said, in luxury and prestige segments, though, there are where the exclusivity is really critical. Some brands still use progressive tiers, where the higher the sales, the higher the margin. I'm sorry, the margin, but I'm saying royalty. I apologize. But really, they tie those increases to marketing investment commitments rather than a pure sales. So this is where we really want to look at, again, which market you're in and which strategy in terms of royalties will work the best for your market. We then look into weighted minimum guarantees. And that really helps to set an achievable 1-year minimum guarantee that scale upward based on your performance of your license. And the reinvestment clause require about 10 to 15% of royalties of fund to be joint marketing. So thinking about as well, even though you are getting a recurrent revenue, what if that revenue actually going to have to go back into marketing to help your licensees to be successful, and as well as for them, how much they're going to be putting up into marketing for them to be successful with your license. And thinking about the audit and exit clause are very important to really include the automatic revisions rights if quality or compliance slips, because this is where the danger zone is. As you start to onboard more licensees, you potentially might have a risk where your licensees start to produce product with your brand on it that do not match your quality, which then can jeopardize your brand perception. So your goal is not just to find the right licensees, but as well as to be able to monitor them and be able to have an exit plan if they start to slip. Very important. And really thinking about how do we prevent the underreporting. Because reporting in licensing is going to be critical, because that's how you're going to know how much sales were made and how much royalties that you're actually supposed to receive. Is thinking about how do I include a digital reporting and a quarterly audit in Access, so that you can have a transparency, and transparency in licensing is non-negotiable. The more you set up and have the right tools to be able to get the reports, look at those reports, validate those reports, get your licensee submit for license approvals, the more set up the system is digitally and electronically, the more seamless it is, the more successful you will be. And should I really think about, a lot of times we think about, should we really grant exclusivity when we do a license? And we really guard you to think about whether it's only performance-based exclusivity tiered to matrix, and really making no promises. Because if you are going to offer exclusivity, you are going to tie and limit the abilities of what your license can potentially do. And most brands undervalue themselves, honestly. And we see this more than ever in the last few years of clients that have came into our portfolio. We calculate licensing potential value, and that really helps us with this formula to really understand the abstract brand story and turn it into quantifiable number that strengthens your negotiable position, right? To calculate that, we look at the brand awareness index times engagement quality score times differentiation factor and times gross margin, and we divide that by your capex ratio. And that score helps us to use in the negotiation positions when we are negotiating the terms of our license. Think of it as like your licensing credit score. And that is really going to be an essence to decide whether you are ready for the licensing as well, and whether your product and your brand is licensable, if there is a desire for it. And when we start with kind of a praxis like a web traffic, right? We look at the repeat rates, we look at the media reach. It's really all about directionally showing value. And that's where it's going to be important for the licensee or people who are interested in your license to understand. Because nobody wants to license something that is not popular or is not generating large volume of sales. If it's not a brand that is unique and followable, or if it's easier, a brand that has products easy to replicate, then it might not be a great strategy to license because it's not gives the value to licensee. But if you are holding certain patents for your product and you already have demand and people loving it and you're selling it like hotcakes, not taking that patent and expanding it in other categories or other avenues geographically of sales is an amazing strategy, a long-term thinking about licensing and how that could leverage. But you got to prepare yourself for it, and you have to have the right numbers in all those aspects that we just talked about. And how to justify higher royalties is to really be able to show the conversion data and the customer loyalty matrix. Licensees invest in traction. They don't really invest in hype. So if you were a success overnight and then your sales start to drop 6 months later, well, that doesn't really help you to negotiate a good royalty rates and go into the licensing, because it really is all about the quick and easy success, but there's really no traction, right? There's really no repeatable customers and base of sales that are coming in. So your brand and your product really needs to have a strong following in sales and traction over time, not just over a couple of few months. Sometimes we look at least 2-3 years so that we could be able to build the right case for licensees. Thank you, Mary, for sending a question. I really appreciate it. I see that questions start to come in. I'm really excited to see you guys are interacting. Thank you very much, Mary. You're asking if your brand is regional, will it translate globally? Really, the regional strength can outperform global awareness when it converts. So we often say start with a pilot regions and then expand it out. Great. I'm glad that this was helpful. Thank you, Mary, for sending your question. I appreciate you. Licensing success lives in execution. And create a licensing governance framework built on 3 pillars. Performance dashboards, where we'll track royalties, compliance, category margins. We'll look at the quarterly business reviews in real-time adjustments, because things change and shift all the time. And renewal logic, which is a really merit-based renewal tiered to KPIs. And if they tie to those KPIs, again, who sets those KPIs? It would be between you and the licensee, and an overall vision for this license. Because if you have an underperforming licensee, your opportunity should be to be able to shift and find the licensees that could really give you a high performance within that category. You don't want to spread too thin your license where you have multiple licensees doing the same thing within the same pool. So your really goal is to figure it out strategically who are the right partners and who are going to be the right licensees that you will have the most success with. This shifts licensing from side hustle to a strategic growth decisions. And that's what really licensing is all about. Set a tone for your license from day one. Governance is collaboration. It's not really a control. Position it as a brand protection for both sides. Be transparent with licensees and have a dialogue when you are setting out those guardrails, because it will allow you to potentially find some other opportunities that you may have not thought through. And when you are running your license, be sure that at least twice a year at minimum, or better yet, quarterly, you are doing an audit, especially in the early stage deals, to ensure that you are putting your license for success with the right licensees. And the KPI that matters really the most is going to be your royalty growth, your partner compliance, and sell through, and thinking about the renewal retention. Those are going to be the main KPI matrix that you want to look at as you're building your licensing business. Often there are blind spots that we want to identify early on when we are looking at strategy and moving into licensing. 3 patterns that I see across the industries that we often see with the clients that have come in and we are helping, or we've wanted to help and they potentially walked away because it was not a right thing for them, is number one, we're seeing waiting too long to act. By the time the growth really flattens, leverage becomes weaker. So you really want to make sure that you start thinking about licensing and start putting it in place when you are at the up of your curve, not when you're already flat. Thinking about that early on and not be afraid to pull the trigger, because one of the most important things to understand, which all of our founders who came to us absolutely did not think of it that way, is that licensing is also a long-term game. It doesn't mean that if you decide to do licensing today, you are going to have licensees and start already working in all the contracts in place the next month or next 3 months. It can take sometimes up to 12 months to write your first contract and to make your first deal. So you got to give yourself time and think long term. If that is your vision, you need to find the right timing to actually start. The other thing we look at and where we see the pitfall is over licensing for cash flow. Really, it end up leads to the brand dilution, right? So don't think about that your licensing deal is just purely for your cash flow. It's just purely for you to make more revenue. I mean, it is definitely one of the most important things. But like I said earlier, if you are having too many licensees in the same category, and if some of those licensees are not strong, they might be diluting your brand. So you want to be very strategic and potentially have a point of view of who you want for licensees even before you start structuring your licensing deal and going public with it. And really, the other thing to think about is treating licensing as a marketing deal, not as a business unit. Because licensing is not marketing. It helps you with marketing, and it helps you to create more brand awareness and reach more people. But it really is a business of its own. You really need someone who will manage it, who will keep a close eye on it, and be able to help you to succeed within that. Thinking about portfolio and not as a project, right? This is really becomes licensing becomes a portfolio of other licensees that helps you to tell the story of your brand. It has to be highly curated. It needs to be constantly reviewed, and you have to find the right balance. Balance in licensing is the key. And like I said, when you are thinking of doing licensing as a long-term strategy, finding the right time to do this. Because once your first deal is synthesized, approvals, reporting, governance, all working seamlessly. So you have to make sure that not only you are starting soon with your reach and structuring of the deals, you also have to start very soon at that exact same time to build the process, to build the systems, to be able to support your even first license that comes in. And no, licensing is really a structured, if it's done properly, does not looked upon poorly by investors. Investors love scalable and they love assets like revenue. So anything that you are actually able to show as your next level revenue stream to add on to what your traditional business is doing is just a plus. So don't be afraid of looking into licensing and scare off your investors. And a licensing or brand partnership manager is going to be a must if you are planning to do this, because they need to be able to coordinate design, finance, and legal. So finding the right partner or bringing in the right partner on your staff who is experienced in licensing and brand partnership is a key. And that often will be a great spin-off and a great progression of not just your D2C business, but even your wholesale business. A lot of our brands we work with, they were able to actually open up even private label doors because they had strong licensing programs. So thinking about that as how that will also impact your overall business is very important. At the round table, I have shared a brief version of one of our clients that we worked with and a little bit of a case study. And I'd love to really dissect on how we did it. I really told you guys what we did, and now I really wanted to tell you how we did it. You know, a 15 million lifestyle brand introduced 3 licensees: footwear, home decor, and fragrance. Within 18 months, royalties add 10 million and lifted EBITDA from 9% to 22%. Why did this work, you might ask? Because smart partner selection using category adjacent sourcing. We looked at the tiered royalties. We created a co-funded marketing strategy, and quarterly business reviews and dashboards helped us to monitor the performance and make quick pivots where they were needed. Licensing didn't expand their workload, but it expanded their reach to the customer. Their D2C business went up and their wholesale business went up within those 18 months of licensing deals that they were running. So licensing does impact positively, if it's done right, your overall business as well, and helps you to climb out of that plateau. And like I mentioned, if you're thinking of doing licensing, you got to start doing it sooner and plan for it sooner. Because as typically, as I mentioned, it can take 6 to 12 months before you will sign the first deal and have all the systems in place. Marketing benefits starts almost immediately, while the royalties flow will take time. And how do you keep a momentum is really by building the innovation into the contract. seasonal capsules, sustainability goals, or co-branded campaigns is what's going to help you to keep that momentum going. And if the partner really underperforms, like as I mentioned, it's going to be very important to implement the corrective action plan. 90-day targets, then you're going to reevaluate. And accountability keeps margins healthy. And if they continue still underperform, this is where your exit clause are going to come into play. So making sure that those deals are structured correctly, that gives you an opportunity to exit when needed, is going to be important and very critical. So as we come to the end of our live webinar, I'm super excited again for everyone to be here. I love to see the engagement, even when we are then posting it and you are able to see this recordings, at your own leisurely time and go back and actually giving us feedback. It helps us to do and deliver you a better information. So licensing isn't really about giving away control. It's about multiplying capability. If your growth has plateaued, and it's not because the market is saturated, it really is because your leverages model hasn't evolved yet. We create the licensing readiness diagnostic to help you identify high impact categories, evaluate partner profiles, and model your potential royalty maps. If you're interested, there will be a link to my calendar to schedule a first free discovery call, and we can take it from there. We have to put together a quick guide for you. And so if you are interested to get the guide for this particular topic of licensing, again, just let me know in the comments. We will send it to you. We have the guide that we gladly to share, of course, with everyone who has registered. So that I also encourage you, even if you think for the next events you're not able to make it live, do register, because you do get the benefits of getting the guides that are coming in with this webinar. And if that sounds valuable, and you'll find the link below to this video as well as to the roundtable video that would allow you to be able to get a full picture of what it means to go into licensing. And one more thing, this community grows through conversion and conversations. So if today we brought you the insight or clarity, please like it, comment, or share this and replay this so that we know that we added the real value. Next month, Path to Profit with Yay, we are going to talk about a really topic that really close to me and often is asked by all of our clients, is to enhance brand presence through strategic engagements and insights. You can go to our company page on LinkedIn at Yushkova Design and register, and we will be very excited to share with you more knowledge next month, and super excited to be here with you. Our next event will be on November 20th at 10:30 a.m. Pacific Standard Time. We are shifting our hour by 10 to 10:30 moving forward. And really going to be exciting topics. So I hope to get to see all of you. Please do follow us on LinkedIn, subscribe to our YouTube channel at Yay Designs, and share the knowledge and let us know if what we're sharing with you is valuable. Have a beautiful rest of the day, and I see